does not take into account your personal situation.
To make sure you get the most out of wealth, wine and wisdom, folks, please follow the house rules. Don't be a wallflower, get involved in the chat and enjoy this episode of Wealth, Wine and Wisdom.
Witten.
Fenton made it just in time. Good afternoon, folks. Good to see you on and joining with us today. There's a few of you on already, which is awesome. Friday, 31st of October. Is it Halloween today?
It is Halloween. Yes.
There you go. My kids are a little bit older these days. There you go. Fenton's put on the Halloween style down there. He quite likes the little jiggery pokeries.
Yes.
But, Megan, g'day. Patrick, good to see you. Deb. Hey, there's Deb.
Hey, Debs.
We miss you, Deb. I hope you're well, wherever you are in this wonderful large land. Fenton, what's going on?
Well, mate, another shout out to the boys down at Barmer Park for another cracker that they've brought across the table. We'll see what it tastes like today. But it's a beautiful Shiraz. Look at the colour in that. That's magnificent.
I got myself a little bit of rosé, not very manly, but it tastes fantastic. So it's even got a rose on it. There you go.
Oh, look at that! Oh, that's French. That bottle.
Yeah, that one's good. It's a good bottle actually because it's got a resealable lid, and I use them for water bottles. But there you go. But,
or recycle it a few times and have it for a few different wealth, wine, and wisdoms.
Indeed, D. Afternoon to you. Megan said Deb's back from Bali. Oh, there you go. Fantastic. Traveling all around, Deb. Anyway, Fenton, let's get on with the show. Good to have you here with us, folks. A fantastic Friday. Only two more shows to go before the end of the year for us, folks. So fantastic to have you here. What's on the agenda, mate?
Well, before we get cracking into it, Jace, I'm officially famous now, Jace.
Tell me more.
I've cracked the code. And I've officially become, I wouldn't like to say internationally famous. Others might, but I'm a little bit more humble than to say I've hit international superstardom. But I had my Facebook account mirrored and not hacked, but there's a doppelganger out there trying to entice our clients across and they've spoofed my profile. So there's multiple different Fenton financials out there. So be very, very careful. Look for the real deal, which is this. But there's an AI version out of me somewhere. So there's some wanker out there who's coming and saying, "Come and join our WhatsApp group." So team, I don't do that sort of stuff. So if you see me reaching out and saying, "Please join our chat," not me. It's some spammer, parasite in this technology world. So it's not me.
There you go.
But there you go. I'm famous, Jace. I'm worth copying. There you go. That's
good. Yep.
I thought that was something to share.
It would be a surprise if Fenton was doing active stuff on some technology. That's for sure. No, that's actually not true. You're not bad on some hardware. Just the software might struggle on. But there you go. We've got a few of the regulars in the house. Jeff's there as well. Harry, haven't seen you for ages, mate. We should catch up. Great to see you. Scott,
hey, how's up?
In the house. Yeah. Well, that could be true on Crime Stoppers, Andy. Harry reckons.
Yeah. Don't dob me in. Don't dob me in. It was Witten's fault. It was definitely Witten's.
There's Hemo as well. Well, we do have our technology hopefully back on track for this show as well, folks. Last time we were updates and bits and pieces, but great to be with you for a Friday. Craigie Hampton is on for the second one, big fella. Good to see. Maybe you've got nothing better to do, or we did all right last Friday. Either way, fabulous. Good to see you here, mate, as we go. But listen, there's plenty going on out in the world of business, the world of investing. the big wheel keeps on turning, folks, and there's always plenty to talk about. You know what I've done this week? I've tried to find some good news stories.
Shit, well, I haven't done that.
I might leave them for a bit later, Andy. Maybe we get on with it. But I'm happy to kick off and do a little bit of an update in my world. Certainly, when it comes to the world of real estate, we always try and catch up and find out, the lay of the land, some statistics. I always like a good stat, folks, when it comes to our place and space. And check it out, the vacancy rate, which is something that for all of property investors, certainly the residential property investors, is heading back down again, Andy. Heading back down again. We had a little bit of a spike over 24 and 25, climbed up to mid 1.2, 1.5s nationally, and heading back down now again. Now, listen, for anyone looking and sort of seeing this for the first time, that you might sort of see a rather large spike down there from around the 2020. Dan, it's just headed down. That was COVID, unless you were sort of not here or somewhere else in this universe. But certainly it hasn't recovered, and our supply chain is still struggling to have delivery issues, and vacancy rates and rents, folks, are still going up. Now, they're going up slower than they were a little while ago, certainly because of things like inflation. I know Andy's got something on inflation a little bit later on, so keep an eye on that. But if you have a look at this, check it out. If you go, I'm just going to just cycle through the states here, and you have a look at each of the states. So Canberra, 1.5, still okay. A little bit of a slower market in Canberra. Check out some of the big kahunas. Check out Sydney, 1%, and down. Now, when the vacancy rate pressure's on, folks, rents start to go up and property prices tend to be pushed along a little bit as well. Have a look at Brizzy. Brizzy's close to 0.8%. This is loony stuff, Fenton, I tell you. When you look around Australia, check out old Adelaide, where it was down to sort of 0.4, but it's up a little bit. Still, under 1% is literally nothing to rent, folks. Nothing to rent in the market. It's
just transactional vacancy, really, isn't it?
Well, it's vacant for a moment, and sort of then, check out Hobart. Hobart's crazy. I never understand Hobart, but you've got to come from there probably to understand it. But listen, Melbourne, had some pressure in 23 and 24, released a little bit because there was certainly some political stupidity. We've talked about that ad nauseum. Still didn't unlock, the world of supply, and it's starting to sort of tighten up a little bit. Anything under 3% is undersupplied, 3% is balanced, and over 3% is oversupplied. But anyway, that's the gist of it. Low vacancy rates nationwide, and it's going to stay that way for sure. Weekly asking prices. Why do I like this website, Andy and folks? The one which is called SQM Research, because certainly in this space, which is called what I call a leading measure, people are listing properties for sale. Now, this is data on listed properties, not sold. So what you can see is the future, maybe 30, 60, 90 days out when it comes to data. And we've got some pretty interesting data, which is kind of, just continuing upwards. Had a small adjustment here for a little while when it came to interest rates, and then it's just continued to tick up across the nation's places and spaces. But, have a little look at this, folks. When you have a look at places like, let's say, Sydney, boom, still going up. And, Brisbane's on a rocket ship ride. Look at that thing, just going and going and going and going. Let's say you have a look at somewhere like Melbourne, still on the up and up, but a bit slower in its trend. And so we're seeing that. We've seen that, in all sorts of different ways or spaces. But certainly overall, Andy, folks, when it comes to the data of the property market, vacancy rates low Australia-wide, asking prices in some places still accelerating at a fairly hefty pace, and some places are still going up but a bit slower. There's no real reason for any of it to slow down. unless inflation and interest rates really put some issues in our pockets. Andy, what do you think about that?
Well, mate, I guess the big question on everybody's lips is what's the interest rates going to do to support this crazy rocket ship ride?
Yeah, well, we're all hoping for it to go down again, but what do they say? Hope those who are hopeful, lunatics or something.
Anyway. I love it when we go for a good saying. We just butcher it every single time.
Yeah. Anyway, there's something about hope when it comes to financials that's not a very good saying. But anyway, other than that, keep going. Save me from myself.
Well, let me have a little bit of a look at what's going on. Because I promised everyone last time that we would catch up when we'd talk about interest rates, right? And what's actually been going on. And interest rates have hit the news again. They're back. Are
you sharing your screen? Because I can't see anything. No.
I'm getting to that point, and I'm just adding the camera in, Jace. I'm just using a little bit of creative ad lib.
All right, let's go.
So there's a couple of things here, actually, I just want to point out. We'll just do a little bit of a wrap up on the markets before we jump into interest rates. But the big question on everyone's lips is where is it going? But there's a reason why I wanted to start with markets. And if we have a look here, this was actually from last week. All ordinaries, not too bad for the year. We've done about 10% for the year. In the All Ords, that's the Australian share market. So pounding along pretty well. 3-year returns, 15% per annum every year for the last 3 years, and 12.9% every year for the last 5 years. So, all in all, pretty damn good from the All Ords, and that was to September. I just want to have a look at one thing down here, and you might pick up what I'm putting down in a tick when it comes to the conversation around interest rates, right? I just wanted to highlight here, you can see as far as the sectors within the market, what's performing and what's not performing. And if we have a look at energy stocks, actually negative 3.1 over
Zoom
1
in
year.
a little bit, Andy, so everyone can see. It's very small. There we go.
Negative 10 over 2 years. So that's really, really interesting, isn't it? Because one of the things that we'll probably chat about a little bit later on is going to be energy. And you go, well, what's happening in the energy market? Are things good or are they bad? Like, what's going on? Are bills getting cheaper? Are they getting more expensive? Those are good questions. So just let that marinate for a little bit as we go through here and have a look at some of what's been going on in the world of interest rates and investment markets. So we haven't brought this up for a little while, and for those of you who are seeing it for the first time, this is the Australian 10-year bond rate. Now, effectively, what is it? What does it mean? And how does it apply to markets and interest rates? Well, interest rates are set by the Federal Reserve, right? The RBA. They actually set the cash rate, which is the overnight cash rate, which we hear reported in the news from day to day. Now, they set the rate, but the market is ultimately predicting what the rate is. And the idea of these things called 10-year bond yields, this is actually the market telling you what the future interest rates are meant to be, or what the market believes the future interest rates will be. What do I mean by that? Well, at the moment, the bond yields, the 10-year bond yields, are sitting at around about 4.2%, right? So that means if you were to buy a 10-year Australian government bond, you were to buy that off the Australian government, guaranteed by the Australian government, they would give you an annual rate of 4.2% for that bond, risk-free rate 4.2%. Because that is basically, they're saying that in 10 years' time, we believe that the interest rates will be 4.2%, right? That's the way of thinking about it.
Or higher.
Or higher. Now, this is a market set, right? Not set by the RBA. It's not set. It's market led. So market forces. This is what the market believes.
Free market, Andy. People are buying this at a price that they think they're going to win at. Really, at the end of the day, that's what it means. Like there's 1,000 traders, and they go, "I'll try and buy these bonds. Here's my price because I'm looking into 10 years and going, here's my bet." Yeah.
Yeah, 100%. So typically more informed than most statistically set measures by any government or RBA or anybody like that. So this is a future predictor of what's going to happen. Now, What happens is that when we look at today's rates, we start to go, okay, well, are they
Interest rate or bond rate?
interest rate? We go, is that above or below what we anticipate the interest rate to be in 10 years' time? Right now, as you can see right here, this is 4.2%. So this is significantly higher than what the interest rates are right now. So this is saying that the market believes in the future interest rates will be higher than where they are
So
right
you
now.
believe it's the cash rate right now, not the interest rate. Yeah. So the cash rate right now is 3.5. Yeah. 3.75.
Yep. So, but this is a long way out, right? Now, this drives investment markets because what happens is if the 10-year bond rate is higher, then the cost of debt is higher, which means that the potential share market returns on money that they borrow, companies borrow, is going to be lower. So all other things being equal, higher interest rates, lower investment market returns, right? That's a broad fundamental, right, that we look at. So where are we heading right now, and why are people talking about where the interest rates are going? Because where does everyone believe the interest rates are going, Jace?
The general consensus is they're going to go down 1% over the next year or two.
Yep. And so what does everyone think out there? What whack in the chat where you think interest rates are going to be over the next 6 months, right?
What have you seen? Yeah, what do you think, or what have you seen, folks out there? I know there was ANZ saying something the other day, and a few of the banks and the majors say, it's up or down, sideways. Even saw a few loonies in the last few days saying it might go up.
Well, I'll comment on that in a tick, which has something to do with that red line.
Yeah.
So this is from this is an RBA cash rate. So this is the cash rate that gets set by the Reserve Bank of Australia. We're currently here. Whoops, get a color on there. We're currently here. So these are the predictions by. I've cut it off down the bottom there, but ultimately CBA, ANZ, Westpac, so the big four majors. I've actually cut it off the chart. So this is where they believe interest rates are going to go. So unanimously, everyone is down. Two of the majors are forecasting around about a 3.3%. Some are forecasting a hell of a lot lower. Now, you might even see some of this based on how you're seeing fixed rates change in the market. Right, because if the banks
fixed interest rates, now we got to be clear: cash rate, bond rate, fixed interest rate.
you tidy it up because I'm on my little wave.
You keep rolling and I'll fill it in, Benton. All right, the fixed interest rate, folks. Right,
interrupts me, but don't interrupt me. So when banks start to set their mortgage rates, right, and they've got their fixed term rates. Now they might have fixed term rates that are actually lower than the current variable rate. So you might have a home loan at 5%, and they might be offering fixed rates at below that. They might be offering fixed rates at 4.5%. Now that's because they believe interest rates are going to fall below that 4.5%. So they're enticing you over, but medium term, they think that the cash rate will be under that, so that then they will make money on that. So they're kind of betting on where the market's going to move. And you can tell what the banks think is going to happen by looking at their 1 year fixed interest rates, 2 years and 5 year fixed interest rates. It gives you a good indication of what the banks are thinking. Now, unanimously,
we're getting 5 year fixed interest rates now, 5.5% from some lenders, down from 6.5. So it's pretty clear what they think. Yeah,
100%. They unanimously, they all think that interest rates are going down short term. Long term, all right, the 10-year bond chart, right? The market believes long term that interest rates will get back up, or the cash rates rather will get back up around about that 4%. Right, that's what the market believes. But at the moment, the bets are that we're going to have another few interest rates cuts. Unanimously, all the banks believe that that's what's going to be happening in the market.
Yep.
So why the more recent bit of turmoil and when I say turmoil, why are people saying, oh, the interest rates might even go up? Why do you think that's happening, team? Whack it in the chat,
folks. Why do you think there's a few commentators out there saying, well, maybe this going down stuff is not actually going to happen? We think it might go up. There's an outside chance. What forces are at play?
So
Did I give it away before?
No. I reckon. Well, I think that maybe I've given it away. But like clickbait journalism, that's number one, right? Fear, scare the shit out of people. They'll read the article. Just flogs, spreading fear and hate and cortisol. They're cortisol machines, Jason. The journalists are cortisol machines.
That is exactly it. Bit of cortisol and adrenaline, mate, right in there.
So this is the reason here. So this is these are the stats that released by the Australian Bureau of Statistics just recently. The inflation data. For those of you who are not quite sure on what the inflation data is, inflation data basically says the cost of living, right, is going up or down from quarter to quarter. So is milk more expensive this quarter than it was last quarter? And the CPI, Consumer Price Index, tracks the percentage change in the cost of stuff from quarter to quarter. And the idea is that the Reserve Bank's mandate is to keep inflation within a range, right? And it's within that range at the moment, right? They don't want inflation to get too high. If inflation starts to run, then they'll raise interest rates, which reduces the amount of money that you and I have in our pocket, which puts downward pressure on spending, puts downward pressure on inflation. And so there's this little spike here that came in and created the clickbait journalism in and around, will there be a rate rise that's coming on? Now, that's very valid because it was an unexpected uplift for most people in change in the cost of our living. Here's the thing, team. Where do you think that those costs have come from? Now, this is a really interesting one, and we haven't spoken about it, but Mr. Whitten.
Can I have a guess?
Yes.
Well, I was filling up my car the other day, and it was friggin' $2 for diesel. $2. I reckon something to do with energy and fuel would be my guess. Electricity and petrol.
And what? Yeah. So spot on, Mr. Whitten, top of the class. What other dumb thing did they do recently which helped push something up significantly? And it was the politicians driven.
Oh yeah, there they do it.
Right, so let's have a look. So in here, where are we? So alcohol and tobacco, that's gone up 5.9%. Geez, they're getting expensive, those things. You'll probably die poor rather than die from those things. But housing up 4.7%.
Yeah, crikey.
On the quarter. 4.7%. Now, Jace, how much did they subsidise housing just recently?
First home buyers, exactly. Money like drunken sailors, giving it away.
What was it? Well, the 5% subsidy. Well, they've almost hit the 5% in 1 month of the quarter. So that's gone through the roof.
Insane. Yeah. Give away free money. It's not free money. It's not theirs. It's ours. Taxpayers are paying for it. Yep.
Now, the other part, and here it is. Boom. Josh, smack on the money. Now, we all know here that every time the government do dumb things like give energy subsidies, try and interfere with what should be free markets, they end up destroying and tainting the markets.
Yeah.
And I was trying to find the statistic and I just couldn't find it, Jace, before I came on tonight. But it's something like 30 odd percent. The cost of increase on electricity in the last 12 months has gone up 30 something percent, right? It's gone absolutely through the roof. Guess what's not listed here in the ABS CPI data?
Isn't that like they every now and then they'll take something out of the bag of goods and put it back in and take it out? It's like, oh, we don't want that one in this time.
This shows what's happening. But this is the madness. This is the madness of toying around too much in the chase of net zero. I don't care whether you're in favor or not in favor of it. The launching and how they are running these policies is just driving energy prices up. The other part is they put the subsidies in. I've got a great graph, but I just can't find it. But I'll bring it out next week. Energy subsidized, cost of energy goes down. Like as in cost to consumer goes down like this, cost of energy goes up. And then it's a net zero because you've subsidized this level, right? but it's gone up by almost exactly the same amount, so that the net difference to you is zero, right? But when the energy subsidies finish, the net difference to you is what was the energy subsidy, right?
Always
And that
happens. Always happens. If there's a subsidy, it's not a free market, and when it's over, e.g., it happens in real estate. You go to a place where there's a boom in mining, and mining companies go in for 2 years and beef the rent up for a short period of time, but the true rent is lower. And then you miss out. So yeah, exactly.
So when this bunch of muppets come on and they're going to start spouting this BS, like let's just be totally frank about it. These morons are going to come out and start saying, "Oh, it's not our fault that inflation's running out of control." It is 100%. The two main areas that they have interfered with the most in the last 12 months. Oh, it's my birthday. You do these ones that I've done oh, it's not working. The two areas that they've interfered with the most over the last 3 years, even, right, are the key drivers again of inflation, right? And that's the reason inflation has kicked, or a significant part of the reason. And energy is so important, Jace, because it's in everything.
Well, I mean, every bit of research shows when you can have well-priced energy for a country, you get innovation and jobs growth and economic wellness.
Yes.
Anytime energy is too expensive, it actually stifles. It stifles the economy, and that's shown everywhere. So, it's a fundamental piece right now, and it's interesting because let's have a look at a few things. And
just before you jump across, Jace, going back, like, how do we know it's not just the energy companies monopolizing and making massive profits?
Well, I don't know if you can know, but have you got an answer? I would say that they're encouraging the politicians to do something dumb because they know they can capitalize on it.
Well, what was the return on the energy sector within the Australian stock market? Was it net negative, which means net negative performances of the underlying companies?
So they're not benefiting. So I find that hard to believe, but they'll work that out.
I reckon there's probably a few handsome bonuses going on there.
Bonuses, yes.
Share market down in energy, profits down, energy prices through the roof, right? At 30-odd%, you would think that would contribute to the growth of the stocks, but it's not. So it points more to government interference, government manipulation.
I like how you've joined the dots there, Fenton, rather than collected dots. I like it.
Energy prices up. So so I couldn't let you get away with that because I was going somewhere with it. It wasn't just a random.
Well, I was going to say, and that means to us, Fenton, what? And so
what it means is that it is likely that we're going to end up with inflation spiking on the back of energy prices, petrol prices, and housing prices. Those are likely to go up. Like, I believe that to be the truth. But
short term, the markets, most of the aggregated opinions, which put their money where their mouth is,
yes,
basically are saying, it's there, but we don't think the interest rates will go up with it.
It's like the banks know these policies before they come out, right? And so they're aware of it. The market is aware of this thing. You know who's not aware of it? The people watching the news, sitting in their lounge rooms. They're not aware of these things. The market's aware. The banks are aware, and they've factored a lot of this into their thinking. So, they're not dumb. They might be mongrels, but they're not dumb. Bankers have got their shit sorted. That's their business. They're very good at taking your money.
They don't book billion-dollar profits accidentally. That's for sure. So now, talking of energy, this is a really interesting one, and this is kind of like on a lot of radars out there, especially in the world of real estate as well. The idea that data centers is a hot topic around the world, and tell you what, they're pretty energy hungry, Fenton.
Oh, yeah, absolutely.
And this is an interesting one, right? There's a big I don't know, I don't like the idea of there's a war on AI. We're in a war for AI, but no. Anyway, there's a competition going on around the world when it comes to AI creation, et cetera, et cetera. Data centers are a big piece of that, and electricity is a big piece of that.
Huge.
So all of these bits fit together. What's going on right now in certainly Australia is that some data centers are absolutely underway, and general office construction going down, and data centers are going up. Now, Andy, what would I say about that as a future issue? I think that commercial real estate is going through a transformation post-COVID. Its usage and vacancy rates, you can see a lot of places in a lot of B-grade commercial real estate, especially office space, is actually struggling. You and I talked about warehouse stuff a little while ago, and that logistics, that magic last mile with Amazon was big money. And now the big money in this sort of commercial space is these data centers. And
Absolutely.
where are they? Can they get low-cost electricity? Can they be constructed fast enough? Can they get the chips? If you're in the world of commercial investing and commercial real estate, you might want to get a piece of exposure to this market.
Well, one of the great things about being in Victoria and Tasmania is we're a little bit cooler down here, both by temperature and by demeanour. And ultimately, what that means is we're a lot more attractive when it comes to data centers, right? Because the cooler climate, because data centers you need to keep at a cooler.
Well, that's it.
At a cooler temperature. So maybe that's something that might help us out down here. Probably not. We'll find a way of screwing it up, I'm sure.
Wow. Listen, I'm going to start my good news stories here. Big builders back in the black. Costs stay high, but they're starting to make a profit for the first time. This is great news. Last week, I was reporting on record, sadly, like the most liquidations, companies going into liquidation in the construction industry ever in Australia's history in a year. But that was unfortunately the smaller and the medium-sized builders. The bigger builders have got themselves sorted per se, and a few of the big ones are back in positive territory. What does that mean? Well, that's good news for Australia. Certainly the idea that our big builders at least can continue to do some of the larger projects for us, is good. It's good news. It's not great for the country when our builders go bust. Here's another bit of good news, Andy. Melbourne Uni crowned Australia's top uni 2026 global ranking. See, Melbourne. I believe in you, Melbourne. I believe in you, Melbourne. I believe in you, Victorians.
Another award. We won the COVID lockdown, and now we've got the best university. There you go.
There's a few awards. Melbourne's got some great bits going for it. Sadly, of recent times, the media wants to just beat up the shite bits. Certainly, you got to get rid of a few of the politicians you've got, Victoria. But certainly, there's a few good things going your way, and the uni world is one of them. But here's one that I want to talk about, Fenton, and folks listening in. Now, Victoria, you had a bad trot for a while because, by and large, you would have a significant net loss for a decade when it came to interstate migration. And COVID really sent a bunch of Victorians out of there for fair reasons. And your population and psychology for a little while there was a bit dinted. But I tell you what, secretly, quietly, with not much fanfare, the Victorian population internal migration, so state migration, state to state, Victoria's back in the positive territory for the first time in 20 years, folks. And one of those things, Andy, is that it's actually a cheaper place to live in Australia when it comes to the cost of living compared to anywhere else on the East Coast. Other than you can go all the way to Adelaide. And, Adelaide's a lovely place, but it ain't the East Coast of Australia when it comes to the connectivity and so on, and jobs and other bits and pieces. But there you go. I tried to make it a good news story. Victoria's population growing because it's an attractive place to be, and you've won an award about good universities. So, let's do this one. Where we go. Well done, Victoria.
You know what I put it down to, Witten, is that I
Tell me.
reckon that, and this isn't just anecdotal. This is we've got a few Victorians that have moved back that migrated up to Queensland. Went up there, was like, oh yeah, the sun's great. This is a beautiful place to be. Then they realised it's a shithole, and so they're moving back. So that's it could be the reasons. It's like, geez, it was good there for a little while, but God, the bloody Queenslanders got to get away from this mob.
Yeah, they're an acquired taste.
And they're moving back. So welcome back to Victoria, Mr. Rowley. It's good to have you back.
The roller's back in town. Go Victoria. But
So,
listen,
hey,
here's another little bit of good news. I'll spin this one anyway. We'll make it work.
well, I've got tax to talk about next, so that's the end of the good news story.
Is that it's well, it's gone blank. It doesn't want to be a good news story. We'll see. Right? Why don't you get into it? Benton?
You fix up your technology. It's you know why it is, Jace. It's because you gave me shit about using technology earlier. So it's just it's just hitting you early.
Probably is. There we go. I got it back. But you go.
So hey, team, congratulations. The Australian superannuation system, the PUP from just 20 odd years ago, and a little bit further. Let's face it, it's been around for a while, but it's just a pup in the scheme of schemes. And it's just gone past $4 trillion, making it the fourth largest sort of superannuation fund in the world. Not per capita. Per capita, we're the largest, but it's the fourth largest in the world as we sit today. And I saw this chart just yesterday.
Makes it very attractive for the cookie jar. Yeah, keep going, Andy.
Well, you might see where I'm going with this. So they incentivized it back heavily in the early 2000s, and this was under the Costello government. You could basically put $1 million in, mate. I remember
back in the day.
I remember the old man talking to me about retirement planning for people. They'd come to a financial advisor and boom, crash, whack. They'd walk out and $1 million would just go into super, and their whole life would change. Now those days are very much over, very, very, very much over. Now it's a systematic way of getting money in, but there's a stronger, and they've changed the definition, Jace, of what superannuation is.
When did this happen?
Yeah. I'm getting the information on it, and I'll share it next week. But they've changed the definition now. Whenever these what do you call them? Wankers. Whenever these wankers change the definitions of something, they're up to something. And so that they have changed it. But I do want to just share one extra thing here before we go ahead, because they've changed. So that, as you said, Jace, they are now looking at it. It's a big kitty. It's a big piggy bank for the government now to keep their hands off it. And let's face it, they can't keep their hands off it.
They can't. The two big ones, mate, is people's homes, Prince Place of Residence, and now your super. And they're like, all right,
they're into both of it.
Hey, they're into both of it. It's like, all right, what can we do? How can we scam that? The bastards. Anyway.
So
we've got strategies, Fenton. Folks listening in, this is not Wealth, Wine and Wisdom anymore. It's Wealth, Wine and Solutions.
Well, Wealth, Wine and Winning. Wealth, Wine and Winning.
I like it.
Wealth, Wine and Winning the game of wealth.
Wealth.
So let's have a little bit of a chat, because we haven't talked through the Div 296 tax.
Boo. Hang on. I'm going to fucking boo. Boo.
Boo. So for those of you who don't know, the Div 296 tax was the tax that they were going to bring in. They were going to tax unrealized gains, and they were going to do all of these things, right?
Lunacy.
And thankfully, that got repealed, and after apparently heavy consultation, they came up with this. So what is Div 296? What does it mean? Well, for those of you who have got superannuation balances under $2 million, happy days, totally tax-free when you hit release. Assume terms and conditions apply. Chat to your advisors, but ultimately, $2 million, you can have tax-free for a lifetime, and Good on you. Well done. Right.
And if you're listening and you want to know how to do that, Andy teaches people how to do it, folks. Don't just sit there and go, what? When did this happen? I'll put a little code up in a minute and you can go and catch up with Andy when he does one of those. There you go. Scan that if you want to learn about 2 million tax-free. Keep going, Fenton.
So then for the amount, and geez, they want to make this so complicated, don't they? So then the amount between 2 million and 3 million is then taxed the same way that superannuation is currently taxed before you turn it into tax-free zone, which is 15% on income and effectively 10% on capital gain.
Capital gain, yeah.
Right.
Which is better than anything else on offer. So the first 3 million in your super is better than any other vehicle going around. Yep.
Yeah, 100%. So now there's a few things that you need to manage. I reckon up to about 2.5 million bucks in super. That's you're in a reasonable zone because what'll happen is markets will outperform inflation, and I'll come back to that in a tick. So then above $3 million, they've then brought in this new tax, right? So it's an extra 15% tax on $3 million. So now it's a 30% tax rate in super for amounts above $3 million up to 10
like
million.
A bucket company.
Correct. But
tell me, what happens for capital gains at that rate?
Same. You get the 50% discount, and so effectively it's what would it be? It'd be double. It'd be like 20%.
So I wonder if it's better than. Anyway, that's an interesting question. All right, keep going. Sorry.
All right. So then, once you're over 10 million, and there's quite a significant bunch of people are over 10 million. It's something like. Well, it's in the hundreds of thousands. I'll get
zoom in on that, Andy, so it makes it a bit bigger. If that's good. Yep.
So above 10 million. Now, this is a zone that you need to do a lot of planning in. We've already got a whole lot of cracker strategies on this one, but ultimately, move to drag. There we go. Above $10 million, you get an extra 10% on that tax. So it's an extra 10%. And that 10% pushes it up to 40% tax, right? Now, in my view, in super, above 10 million, starts to become dumb, right? Because there's much smarter ways of being able to manage this from estate planning, from tax management. There's a whole lot of things we can do now, but they're taxing it. So they basically said 10 mil, that's it. Right, so
they don't want you to have it in there. So that's don't have it in there. We want you somewhere else. But
correct. So here's the thing: they've gone, oh well, we have indexed it to CPI, right? And well, here's the problem, Jace, is that CPI is what the numbers we were looking at before, 3-4%. What are our investment returns been? 10-15%, right? So for many of our super funds, they're growing by 10% more than what the indexation is. So that's why I say around about that 2.5 is like a number. It's like, whoa, start to really pay attention when you start to get up to that level, because you might want to start looking at shifting it or strategies to shift it into other areas. Right now, so this all starts, as far as timing is concerned, 1st of July 2026. It'll be the superannuation balance as at the 30th of June. It starts on the 1st of July. The first calculation will be done on June 30, 2027. And first notices will be sent out in 2027, 2028. But here's the thing, Jace, you don't have to just pay the money from your super fund. You can pay it personally as well, because the government is so wonderfully forgiving. They give you options on how you can do that. So all funds will have to report their balance to the ATO. The ATO calculates the balance transfer cap. So that's how much money moves across into tax-free zone. The ATO requests member earnings from the super funds, right? And then the ATO calculates the tax notice, sends that out, and they give you the opportunity to pay it out of your pocket or out of your super funds. You get the choice. That was really nice of them. So they have indexed it. Good news. Your investment returns will outperform the indexing. So you need to be aware of this stuff and how to manage it. And if you do have balances that are, so thoughtful, Leon, 100%, they're always thinking about us.
Yeah.
They're always
Looking
thinking about
after us. Looking after
yeah,
us.
absolutely. Like, what's in his
Yeah.
back pocket? Can you imagine these bastards walking down the street? Like, seriously, can you imagine them? They're
That
probably
bloke looks like all of that money he's carrying around is just really weighing him down. We should just take it off his hands. That's the right thing to do. That's the right thing to do.
I reckon that's exactly what they do. I reckon they're sitting across and they're like, look at that Louis Vuitton bag. Oh, I wonder what's in that. I wonder what I could take out of that Louis Vuitton bag over there. Consumption tax. There we go. We'll tax handbags because they've been performing very, very well.
We'll get that going. We'll get that going. So, Fenton, right, it's coming. And, here's my challenge. I dare people to have that problem that Andy will fix for you. But if you've got that problem now, scan that code up there. He'll fix it now.
Oh, look, there's heaps of solutions for it. Like in my world, Jason, it just, I mean, it's magic for me because I love solving these issues. Like it would be better if we could just leave it the way the system was now. But now there's so many other great downstream ways that you can manage this. And, just on one of our strategies, we can get you 10 million and basically not pay a cent of income tax for the remainder of your life. So they might think that they're smart, but they're not smarter than your average bear, Jace. We've got a few tricks up our sleeve.
Well, certainly. Well, folks, and this is the thing. You've got to be a bit proactive in this space. Andy and I always like to have a few deserved cheap shots at these politicians who do some shit that
we're not cheap shots, Jason. They're very expensive shots. These shots cost us a lot of money.
Our shots are cheap, but there you go. But if you want to learn more, like I said, catch up with Andy when he's doing a couple of the Freedom Machine presentations, and I'll show you a few things. I'll circle back to what I think was might be some good news in a different way. Andy, folks, the gap between Melbourne and Sydney is record. Record. The biggest median house.
Is this intelligence levels or?
Well, no. It's a gap that you can celebrate because it's the largest difference between the Melbourne median house price and the Sydney median house price in recent history. I think I was listening to a presentation the other night, and it was the biggest gap in 40 years. So what does that mean? Usually that means median house price growth for Melbourne. When it closes, it's like a rubber band. It sort of pulls it up over time. So, Sydney's rocketing along, and Brisbane's doing its thing for Australia now, and Melbourne certainly, 4.5+ million people, still good jobs and other bits and pieces in Melbourne. But there you go. I think it's got some good news stories in that sort of space. Interesting one the other day, though. I was looking. Let me skip to this quick one here. I wanted to show everyone. I saw this, which is, the Property Council was talking about the world of investing and talking about scrapping of land tax surcharges could unlock billions of investment, which I agree with.
Absolutely.
Because, it's an interesting one. Mostly in Victoria. Victoria's done something strange when it comes to land tax because, they didn't know how to tax anything else. But this was an interesting one I saw, Andy, folks, when markets change the ability for borrowing and or buyers to get involved in the market, sales volumes slow down. When sales volumes slow down in a marketplace, then the future supply slows down as well. So, and until things change that way. So it's really interesting. This is land sales in Victoria. This was a statistic we were looking at the other night. But it's really interesting. This here was the mining boom slowdown after the GFC, and then the interest rates went up. So lack of money or expensive money slowed the marketplace down. I don't know. Do you remember what happened in this section here, 2017 to 19, Andy, when it came to the world of getting access to money and finance?
Well, markets were hot. They were absolutely going berserk. And, Yes, somebody said that people are making too much money, so they brought in responsible lending practices. Responsible lending. Oh, I've
Responsible
got a
lending.
ripper for you when you
What,
finish this train of
what,
thought
what,
too. Holy smoke!
what a damn joke that was. But anyway, APRA came in, but also they said, hey, listen, let's get rid of foreign buyers. We don't want them. We shouldn't lend people money because the general public are dumb, stupid, and incapable. Let's not let them get rich or get access to wealth, and et cetera, et cetera. And then this is of recent times when interest rates went from the lowest ever to the fastest rise of interest rates consecutively in a year ever in Australia's history. So, when access to capital and cash through borrowing becomes restricted, down goes sales volumes, and then consequently afterwards, issues of access to new property deals.
You won't know this, and listeners, check this one out, right? We were on one of our family office sessions, which we do. We get all of our accountants, advisors, our professionals together for our private clients, and we all sit in a room and just answer questions that we use a combined brains trust, and we answer questions that the guys throw at us and solve them. Ben, mate, you missed the last one, and there was one whose daughter bought a new house and moved into it using the government grants and the government incentive schemes that existed. Now, because of the military, they got reposted somewhere else. It's still their principal place of residence.
Yeah.
The ATO or somebody told the bank that they were then renting the place out, and the bank has now said you've got to go on to investor rate because you're renting it out now, even though it is still the primary place of residence.
That's a joke.
How's that?
I'd get it refinanced.
that is that's just amazing. So now the banks, the ATO, are now data matching, possibly even scraping data and using AI bots to try and then say, "Oh no, you're renting that house out now. We're going to charge you an extra 5% or 0.5%."
Well, that used to be one of the tricks we used to do. So, hey, listen, just tell them that's going to be an owner-occupier loan because you're going to move in. And even when you move in, you move out, the interest rates aren't as high. So, that's bastards. Anyway, there you go. But this is an interesting one. Now, I hear this all the time about Victoria land tax. And I always like the idea of quantifying, folks. Quantify what your problem might be. Don't over-dramatize it. And so, let's have a look at the land tax thresholds in Australia right now. New South Wales is the highest. Down here, good old Victoria is the lowest when it comes to personal name. So your personal name.
1.07 million is the land tax threshold. Well, that'll get you a bathroom in Sydney, won't it?
Get you a car park. But personal name, you have a look at trust, you have a look at, structures and stuff, Victoria and New South Wales is worse. And, so structures a little bit different, but personal name. So you go, all right, well, Victoria's done the shim shaky and changed it pretty significantly from recent times. They were about 600 like Queensland. So I did a bit of a compared to what, folks, when it comes to your land value. Okay,
yeah, because you always hear this, don't you, Jason? It's like, oh, yeah, you can't buy in Melbourne because of land tax.
The land tax.
And I always ask the question. I'm like, so how much in dollar terms is that? And nobody ever has the answer.
Well, they don't know. This is the problem. So, in Queensland, if you've got $400,000 worth of land, right? So land value, this is land value. You pay zero land tax because the threshold in your personal name is 600, right? Happy days. Now, in Victoria, you've got a $1,650 land tax bill. That's the drill right now. Now, that's a chunk, but it's not the end of the world. In comparison to the average house price in Victoria, like a new one, let's say, you can get, $750 to $850 good price property. In Queensland, it's $950 to $1.2 million, right? So there you go. And this is Megan. Look, here we go. $500 for the year. Exactly, Megan, right? So, and when you think about that, it's land content as well. So, if you've got an apartment, then your land content is smaller. Okay. So It doesn't mean that it's something to ignore, but it's certainly not the end of the world, folks, when it comes to your land tax thresholds.
This is I think this is interesting. So, Jace, just dive into that component, right? Because I never really thought about it until you started talking about it. But the idea that you might buy $1 million unit, $1 million apartment, nice overlooking the, Richmond, which there was a beautiful one which I saw recently, or the one overlooking the Botanical Gardens. You might buy $1 million place there, right? Or you might buy $1 million place down on the Mornington Peninsula, right?
Yep.
House and land. Pound for pound, what's sort of the difference in the way that land tax is treated?
Well, really, at the end of the day, let's say you talk about Mornington Peninsula, you're going to be looking at $2,000 to $3,000 a year land tax for the same $1 million apartment in an amazing place in town. You're going to be looking at $500 land tax, maybe even less.
Because it's literally your portion of the footprint of the land.
That's right,
isn't it? So if you're in an apartment, you own like a 50 size of a 50-cent piece of the.
It might be 1 square meter, of you might have 1,000 square meters the apartments are on. You've got 100 apartments, so your portions are 1 square meter or less, even, because the Body Corp owns some as well. So this is the kind of the quid pro quo when it comes to your portfolio. Land tax, apartments are great for long-term capital gain in the right location, because the land component is less. It's location. It's more the convenience of those ones where the land tax can be, onerous in houses. So that's why you mix it up in your portfolio for sure.
Yeah, that sort of excites me because, especially being Melbourne, and we're losing the property race at the moment as far as, uplift, and we punch aggressively. We're an amazing state. We're a sports state. AFL, the Melbourne Cricket Ground, you've got the Formula One, you've got the tennis, the infrastructure. Nobody's taking that away, right? Because no city in Australia now could do that. Like, you can't just dump a stadium in Sydney. You can't do it.
No.
And it's smack bang in the middle. So that's not going away. We've got some of the lower prices. We've been hammered for a while. And you kind of go, the idea that we can just keep sprawling in Australia is dumb. We actually don't have enough money to keep sprawling. So cities are going to naturally be the place that has to go up. So it's kind of exciting, because you kind of go, well, what would you do? Yes, you'd be looking at apartments more so from an inner city kind of the equation. And you've got subsidies left, right, and centre. I think we had stamp duty exemptions and things like that in Victoria. So they're trying to get a lot of it going. It's only got to be a matter of time until it kicks. And
you buy something medium density or high density in Victoria. You buy a 100 square meter apartment in Victoria. Your stamp duty is going to be $5,000. You buy the same priced house and land or an existing property, it's going to be $40,000. So that's a significant difference in cash flow savings.
Absolutely, Meg. Huge.
Huge. It's interesting, and I'll finish with this because I know we're sort of out of time. Unfortunately, I thought we had plenty of time, but the average size now of a housing lot is 50% of them are sub 350 square meters total.
Does size matter?
Well, according to some people, no, it doesn't. But depends on what you're looking for. So if you want a backyard, then you might need something a bit bigger. But if you don't really want to mow the lawn, Fenton, then if you don't want to mow the lawn, then get yourself something a bit smaller. Anyway, maintenance is an issue. So Fenton likes his jokes. There you go. Might be time to finish up. But the size of the average property and the average land is shrinking, and it's not unusual to have 100 square meter lots now in what's called zero lot housing, where you get a 3-bedroom house, but it's really got no side boundaries, a little bit of backyard, and away you go. So what the point of that? The point of that is that the big properties are going to be a thing of the past when it comes to density. They're going to go up and they're going to be smaller. And to be honest, let's face it. I mean, most young people don't want a backyard to mow the lawn. They would like amenities really close to go to the park, and then they can go home and not have to worry about it.
Well, I remember watching a podcast with John Anderson and Peter Costello, and he made a comment which really resonated with me, because it's we're of that ilk where this comment really resonates. And he said it used to be that you had a small house on a big block, and you went out and you used the garden to kick the football in. Nowadays, those very same houses don't exist anymore. The blocks are the same size, but the house takes up almost the whole block.
The McMansion.
So the houses are huge, and the backyards are tiny. And there's a reason probably why kids are gaming so much more, because the backyard's gone, Jace. It doesn't exist. Even in suburbia, they've built out the backyard. So that whole, I remember when I was young, getting out in the backyard and kicking the footy and throwing the frisbee and just climbing trees and stuff like that. Mate, very few people do that now, because the whole house is the damn block. So it's interesting to think about that, because then that really is city living. The only difference is, smaller house, more convenient, closer to the football, closer to local. So yeah, it's sort of more of that push back into cities. And it's funny how everywhere you go in the world, right, bar none, any populated westernized and even eastern country, once they reach a critical mass, the cities are the hubs. And it didn't matter. They said, remember, pandemic said cities are dead. People will never come back to the cities. Garbage. People want to congregate together. We're a herd mammal. So we end up back in the cities.
And infrastructure of convenience, it's got to be convenience infrastructure that you enjoy, places to eat, places to have sport and music and laugh and whatever, like those, and cities do a great job of that. If they're designed. Melbourne's one of those cities that has done a great job of that, over the years.
Go Melbourne.
Done some really good stuff in that.
I can feel it coming, Jason. It's going to go good. It's going to.
But I tell you what, Andy, it's an interesting one. You think I reckon it'd be a very different story if you asked your parents how they felt about mowing on the weekend instead of actually having a life when you were kicking the football. Because this is the thing. People are making different choices now because they want a life. They don't want to have another job on the weekends. Do
you remember kicking the lawnmower, and that you just about rip your arm out, and the old man would say, "Come over, I'm puffed."
It was my job to mow the damn lawn. We lived on an acre. It was shit, so that's why I said I don't mow my lawn. I pay someone else. So there you go. If I couldn't afford to pay them, I'd live in an apartment, because I wouldn't be fucking mowing. I can tell you. Lifestyle, exactly. So, which is fine, which is great. I'm actually a big believer in that. And certainly an investment property, certainly if you need cash flow, you don't get any more tax deductibility with a larger piece of land. And by and large, the larger the land, the worse your rental yield comes from the property, because you do not get more rent by and large in residential real estate. There might be something special in, a larger piece of land because it's business related. But, if you have 1,000 square meters, I'll rent my house on 300 square meters for the same. You'll rent yours for on 1,000.
Yep.
So if it's yield associated, then, and tax deduction associated because you're starting out, then, it's a one that you got to watch. But there you go, Fenton. Anyway, we're probably done and dusted for this week.
Let me give you a little bit of a teaser for next week. I'll take you down a spending hole next week. Not a government spending hole. This is a reasonably good news story. I'm going to start to drop some investment ideas into people's heads next week. Is it next week? Are we doing it next week, or is it the week after?
It's a week after. We're going away. We're having a week off.
Yes,
we were going to try and do it because we were in America, but there you go. Yep.
So where the attention goes, the money flows. Where the money flows, We're prenup. No more ironing. Where the money flows, the market goes, right? So where the attention goes, the money flows. Where the money flows, the market goes, right? That's first time said here. Wealth, wine, and wisdom. Hashtag. We should patent it. So let's have a look at some of the big spends in 2025. We've got the Burj Khalifa. We've got UK to France Channel Tunnel, that big tunnel that goes between UK and France. Burj Khalifa is in Dubai. The Sydney West Connect motorway. I'm not from Sydney, so I don't know too much about it, but that's probably been holding up traffic for a long time. Manhattan Project, the International Space Station, a whopping $150 billion in 2025. So of all of these massive infrastructure spends, right, and this wasn't in a single year, this was over time, of all of these, in 2025, how much money do you reckon has gone into AI? Do you reckon
I reckon
Connect? Do you reckon it's the Manhattan Project? Do you reckon
no, it's trillions. It's trillions. It's come on, baby. Oh no, it's not. No, it should have been more than that.
Just in 2025. Now
it's a bubble, Fenton. It's a bubble. It's gonna bust.
Just if it's going to bust at epic proportions, if it does. $430 billion was in 2025 right? And we're not finished, right? We're not.
We need to be in on this. Give us an investment tip next week. Don't tell us about how much money's been spent. Where do we need to be putting our money? Come on, Fenton.
Well, and that's a little bit of a hint as to what we're going to go into. $430 billion in 2025, and that's inflation adjusted as well, right? So that's what that means is that the International Space Station, to put it up in space, it's in today dollar terms, right? So it's
make a quick point, Fenton. Don't drag it out. You're doing good.
Hey, listen,
it's good. You took the heat out of the 430 billion. If
you do this, I'm just going to drag on longer. I could talk about this for days and not say anything. So what we're going to talk about next week is the $430 billion, because you have to be a peanut if you think that is not going to have a downstream effect on companies. Imagine, Jace.
Where's the second tier effect? Where's the picks and shovel of that shit?
Well, imagine if you and I got given $430 billion to progress our companies. We'd be on holiday.
I'd probably just sell up. I'd fuck that.
get back to mowing lawns. But so next week, I just want to talk about some of the downstream spending on that, because that's a staggering statistic. I think that when people say bubble, they're brain dead. Yes, there might be major movements in markets and the volatility might be extreme, but the idea that AI is a bubble is just absolute bullshit. There might be companies that are, but let's have a look next week at where some of that $430 billion is actually flowing.
You know what I'd love to see, Fenton? The dot bomb, the internet era, when they said, the dot bomb happened. What was the market cap then of those companies? And now look at them. Do you know what I mean? It's like, it shit the bed, but 20 years later, it's now worth, 70,000% more or something.
Well, no, I don't want to bring up the slide, but we were just talking about it before we came on. Apple just hit the $4 trillion mark.
$4 trillion, yeah.
$4 trillion, 4.1.
Nvidia, what was it? 6 trillion or something. Far out.
Okay, well, now that we're talking about it, I'll bring it up anyway. But these are just some, and I'm not going to spoil some of the other downstream stuff that people don't know about. But if we have a look here, we've got Microsoft, $3.9 trillion. We've got Nvidia, $4.5 trillion. Yeah, like just crushed Nvidia, and then Apple, which was 3.8, it's now just gone through So these are big tech companies, right? And they're spending a lot of money in these areas, but not the only area, and there's a lot of other areas and downstreams, picks and shovels, as we say, of these companies. And I think that it's worth having a good look at, where that money's going to go, because 10 years from now, Jace, where people go, oh, no, don't go anywhere near that AI stuff, it's a scam. They'll be laughing on the other side of their face, because I reckon you ain't seen nothing yet.
All right. Well, there you go. That's a great way to finish up the show, folks. Good to hang out with you, Fenton. I've drunk my wine too. There you go. Done a dozen.
I've barely even touched the sides. Well, that was a good session, mate. Good to hang out. We won't be around next week, ladies and gents. We'll be in LA learning and trying to progress our knowledge to do a better game for you, do a better game for us, do a better game for our team. So we'll be over there leveling up, but we'll be back for second last Wealth, Wine and Wisdom for 2025. So make sure that you tune in, not next Friday, but the Friday afterwards. Same bat time, same bat channel, as they say.
Well, we did think we would try and do a live one from America, but it was like 2 a.m. in the morning, and we're like, yeah, nah.
It still might happen, and if it does, it's going to be very disorderly.
It'll be super disorderly. All right, well, there you go, folks. Great to have you here today. Appreciate you joining. Thanks as always, Fenton. Great to hang out and chat and chew the fat.
Well, ladies and gentlemen, it's a good night from me.
And it's a good night from him, folks.
Night, team.
Night.
Thanks for watching another episode of Wealth, Wine and Wisdom.
Make sure you like, subscribe, and turn on the notifications so you never miss a thing, folks.
We'll look forward to seeing you next time.
Debrief the week with Wealth, Wine and Wisdom.
Every Friday at 5 p.m. Victoria and New South Wales time. We know that Queensland, South Australia, WA have different time zones, as does Darwin, but we're sure that you can do the calculations depending on whether it's daylight savings or not.
You can also catch up on all the episodes wherever you get your podcasts. Make sure you check out the Positive Mentor podcast from our 6-star team at positivementor.com.au.